at your broker.
Yeah.
And I looked at myself, I get nothing. And he said to me, why are you getting nothing? I said, I introduce people to the brokerage for their best performance.
Hey, what's up, guys? This is Nqobile Tembane from Top Traders South Africa, and I'm bringing you guys another installment of Market Masters, where I sit down with industry guys and where I sit down with the most prominent and talented traders in the industry. And today we have a comeback. We have a returning soldier. We have the guy who turned down $1 billion investment. We've got Richard Stone with us. Thank you so much. Yeah, thank you so much for coming back. Reason why you're back, I must also explain to everyone, because it's usually like Market Masters. We also have the other podcast, Industry Chats podcast. So I always alternate between the two. But I brought you back right here because people are like, hey, that guy owes us something. Yeah. Anyway, how are you doing?
Yeah, very good, thanks.
Yeah.
This past year has been very not rough, but scary fast.
Yeah.
Very, very fast. The markets have been fast. What has been noticeable is that the markets manipulation. Okay, you have a look at, you talk about technical stuff. Guys say, yes, go to your daily chart. Draw your lines in, go to your 4 hour, go to your 1 hour, bring it back to a 15-minute. That will give you good support and resistance levels. And I work with their support and resistance levels to a certain element, but I prefer the accuracy of the arrows.
Yeah.
And I'd like to talk about the arrow trading system today as well. And I found that very seldom did the resistance and the support levels hold.
Yeah.
Okay. I've got a different system on one of my charts that I've found to be realistic and pretty accurate.
Yeah.
Particularly for now when you must make a decision.
Yeah.
Because a lot of guys look at a resistance level, and at that price they will put in a buy order or stop order, and they go with the market from there.
Yeah.
And I've seen so many of those things fail this past year. So I've got them in my background, but I don't really follow them.
Yeah.
You've got to do what the market's doing.
Yeah,
not guess what the market's doing. Because when you guess, you're in trouble.
Yeah, that is so true. Hey, you might as well just go to the casino. So, if you guys are looking for the full backstory of Richard Stone, you guys can check out our first interview that we did with him. We will leave the link down in the description below so you guys can check out. We had a really powerful conversation there, and I think today we're gonna have another powerful conversation as well. I remember I called you and you were like, I just want to talk about the markets. That's it. OCTA has launched a renaming campaign and rebranded as OCTA. The campaign aims to showcase the brand development, including diversification of trading instruments for clients and implementation of new product features to make trading clear and accessible for everyone. OCTA is changing their brand name to better match the variety of financial services they offer. Beyond just Forex, they also offer commodities, stock indices, and cryptocurrencies as well. OCTA remains a reliable global Forex trading platform. Since 2011, it has offered a high-end trading experience to more than 40 million trading accounts in 180 countries. To celebrate OCTA renaming, I'm going to give you the TTSA promo code TOPTRADER for 100% bonus to your deposit. The link is in the description. Trading made clear with OCTA. Just about trading. Let's talk about the past year though, because it's been a year since we last sat down. Let's talk about what's been happening over the past year, especially in regards to your trading as well.
Yeah, I think something important is choosing a stable broker.
Okay.
You know, there are many brokers, and many of them are really good.
Yeah,
you know,
that's true.
Other guys are there for the taking, as I explained previously. The market maker broker and the primary broker, and you need to find a primary broker where you are trading on no book.
Yeah.
Okay. Your other guys got an A and a B book, and the small retail guys like us will end up on the B book. And that is why they market aggressively, because they're turning people around all the time.
Sure.
Okay, so people come in, they win, they lose, and they lose, and they go broke. And you're also just punting with X amount of money. You know, you're not going to be punting with millions, and you can just carry on and on and on.
Yeah.
So the guys fall away, and they just bring on new guys and new guys and new guys. And if you're working with a primary broker, okay, I think for the audience, you guys must understand that a primary broker is one that gets his liquidity from the banks directly. Okay, that you get, you know, if you're going to make $10, the banks are paying you, not the broker. Okay, and also when you're doing withdrawals, and like me, I've been with my broker now for like 4 years, I think.
Yeah, that's a long time.
Yeah, and I mean, it's satisfaction. You know, if I wasn't satisfied, I'd be with somebody else.
Okay.
You know, their execution is excellent. There's slippage, there is no slippage because you're trading with a bank. You know, they've got no reason to slip you a pip or two on an entry point or an exit point. And by working with the banks, I believe you get the better price, because all the prices are then filtered and you get the best price. Okay. But executed against the bank. So I can do a trade now, say on gold, I'll be trading against Goldman Sachs. Just now I trade the pound and I'm trading against Barclays. You know, just now I do a euro and I'm trading against, say, Credit Suisse or UBS or one of the big boys, you know.
Yeah.
And I think that's the differentiation in choosing your broker. You know, they must be able to show you their liquidity providers. Okay. Because what they do is they get liquidity in and then they will pool it and they will make the price. Okay. So if the average, let's say on gold is 1972, okay, they can easily give it to you at 1972.85. But they're paying 1972. Then they add the pip spread on top. Okay. And if you place a trade, there can be slippage of a pip or two.
Yeah.
Okay. And that's where the bookmaker makes his money.
Yeah.
Okay. And he doesn't want you to make money. And if you do make money, you're going to have a problem getting your money out of it.
Yeah, I think, you know, staying with one broker is actually really a very important conversation, you know, because people tend to now just shift from broker to broker because now everyone's chasing the new thing, you know. Everyone's chasing there's a new broker that's popping up. Everyone's running there. Obviously over the years you've probably been approached by several brokers.
Oh, plenty.
Yeah, but now I want to know why did you decide to like, hey, not take bait to that and be like, okay, now I can just leave shop here, let me go there.
I think it's you know, it's like a friendship. If you've got a friend and there's loyalty, there's respect both sides, why must you move and take a chance on somebody that you don't know?
Yeah.
Because remember, every broker that's going to approach you, I mean, I've had now in the past year 2 CEOs and the international guy even come through to Pretoria.
Sure.
Take me to lunch, have a chat and so on, you know. And I just said, you know what, if I'm not happy where I am, I will consider you guys.
Yeah.
Yes, but we can do better deals and we can give you better this and better that. And remember, all of that stuff is promises up front. Okay. It's all coating, sugar coating. The real thing is when you're pressing the button, is it happening? Is it executing properly? Are stops executing properly? Are take profits executing properly? Particularly in NFP scenarios. You know, you'd for argument's sake, you in a short, you might be say 20 pips up, and you're going into NFP, so it can go anywhere.
Yeah.
Okay. So you say, okay, fine. If it goes up, I'm prepared to sacrifice 20 pips. Okay, if it runs for me, good luck.
Yeah.
Okay, so you put in your 20 pips there, and then the market does turn up, but it goes so fast, okay, because it goes from 0 to 80 in split seconds.
Yeah.
Your bookmaker will come and say, the market has jumped. Okay, it was on 50, now is it on 80. It never went through 60, 70 on the way up.
Yeah.
Of course, it had to go through 60, 70. Okay.
Yeah.
And I've tested them. I've tested everything. And you come out with your stop loss.
Sure.
Yeah. Whereas, I mean, in London, I traded NFP a lot there. And eventually I just realized, it's just such a difficult environment. And I now just stay away from it. You know, you don't know what the manipulation is anymore. Are they going to seesaw the market? Or are they going to take a direction and hang with it for the afternoon? Because sometimes they take the direction which is totally opposite to the news. And then 4, 5 o'clock, then all of a sudden it rectifies and does what the news says.
Yeah, sure. Let's talk about the trading NFP, because a lot of retail traders are participating in news events and all that. But you were talking about trading it in London. So let's talk about that whole experience of trading NFP in London. Okay. What's the energy like? What's happening? Yeah.
That scenario is pretty hectic. The news release, it's the news release of the month. Okay, and it sets the trend for the rest of the month. However, this past year, I've looked at the market, particularly after NFP. Yeah. And then the week going in after the NFP, the morning sessions are beautiful. Okay. Monday to Friday, that first week, there's always good direction, good volumes. So I've capitalized a lot on that. And I have a look at how it affects the market as you carry on, because normally the second week you'll get a CPI or the third week. Which is also a pretty bouncy affair. Yeah. And one of the guys I've worked with has asked me, he would like to trade NFP with pending orders. Okay. So there is a way you can do that, and if it's not going to bounce, you're going to be okay. All right. And basically, but then you must know how to put in your orders. So literally by 5 minutes before the time, okay, you'll see that the market will literally go and lie down within 5 pips. Okay, it actually just goes and rests. Okay, and then what you do is from there, you take a buy order to the top and a sell order to the bottom. Okay, and you put that in, each with 20 pips, and you can leave it open maybe, but 50 pips is safe. Normally MFP can shoot 100 plus. So if you want to be in and out of the market very quickly, then you put in a 50 pip. Because if it, activates that, I mean, it's like seconds and it's done. And you just cancel the other order. Okay. So that's the way I would suggest guys, if they want to do it, to trade, in fact, any announcement like that.
Yeah, but now in London, I was asking also about London. How was trading NFP in London like?
London, well, I did it alone basically, except when we did the hedge fund. Okay. I didn't involve any of the other traders. I actually, what I did with NFP is I pulled the majority of the fund into my account, almost like copy trading. Okay, so that if I trade, the other accounts trade. Okay. Yeah. Okay. Because it's difficult when you're doing guided trading. You don't know what the other guys are thinking. What are they doing? Are they going to press the button right away or not? And that can mess you up. But what was interesting in Canary Wharf was, on a Friday, and it's NFP Friday. I mean, that place is just full of traders, plenty. and you can actually feel a vibe.
Yeah.
You know, you can actually feel a vibe, and outside they've got big screens up where, you know, they've got all the markets going and blah, 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 you know. So you can always see where the dollar is against, particularly the pound and the euro and so on. And, you know, when NFP comes up, you know, it's like dead quiet in that place. So everybody's behind the desk.
No, that's beautiful. That's beautiful. Yeah. So we still on staying with a broker for so long because, like I said, like I mentioned earlier on, right now the culture is, you know, every 3 months, if you're lucky, 3 months. Some is 2 months. Every 3 months, people are with a different broker and whatnot. Yes, I do understand. Sometimes relationships do end. That's understandable. But a lot of guys, a lot of IBs are so enticed by the next broker. And now we refer to the influencers now, because now a broker comes to a person's like, hey, look, I'm going to give you X amount of money to promote us. And then the issue is that now the next broker, what happens with the next broker? The next broker is like, hey, look, how much are you getting there? We can beat that.
Exactly what's happening.
Exactly what's happening. It's always a we can beat that kind of scenario. And I think that kind of mentality or that kind of thing within the industry is kind of damaging it so much that doesn't allow for people to stay in one place for minimum of 6 months.
Yeah, I think you've got a very valid point there. You know, and traders should not be not bullied, but not manipulated. Okay, by IBs. Okay, because it's exactly what you're saying there. You know, I mean, there's one guy that came, the CEO and guys came through to me. Yes, but what are you getting at your broker? And I looked at myself, I get nothing. And he said to me, why are you getting nothing? I said, I introduce people to the brokerage for their best performance. I don't want a pip on top of the pip spread for my pocket. Okay, I don't want a kickback out of their capital that they're putting in. These guys are speechless. I said, but you know you can make a hell of a lot of money on the side of that. I said, I make my money from trading. That's where I make my money. And the other stuff I do is to help traders get where I got, you know. And yes, I've been down the IB route, and it's been very rewarding. But to me, it is you're actually not doing truth to the trader. You know, because he is paying for that money that's going into your pocket. You know, and that to me, I just looked on the third. Okay, that's not fair. I don't like that way of manipulation, and it is just like what you say. Then another broker comes along, okay, yes, but I can give you, and you see, work out the sums quickly. Wow, that's another 20%. I'm getting 10 grand already. You know, that's another 2 grand. You know, and another guy, and these brokers will play each other off. Okay, and then remember, then one day, then they just say, oh, but we can't do this anymore. We've got to cut back on this, and we've got to do this, and eventually then you're worse off than where you were with the first broker. So yeah, unfortunately, that's the name of the game out there, and but I don't like it, and I don't agree with it.
So I think the beautiful thing about staying in one place for so long is that you get to see changes that happen over time, you know, introduction of new stuff and all that. And I think that's such a powerful thing, because when you stay in one place, you actually get to grow with them, and people now kind of fail. Now you can't grow with anyone, because one day you're trading with this guy, next day you're trading with this guy.
Exactly.
And you kind of miss out on that factor of like staying in one place and growing. Yes, there will be, like with any relationship, maybe we'll butt heads here and there. You might not agree with a certain, you know, move. You can, and what I love about a lot of brokers, especially international brokers as well, is that you're able to just go email them and be like, hey guys, look, I don't agree with this. And trust me, well, probably like 7 out of 10 times, you will get a proper response back. You will get a response with a reasoning behind it. And all that. They won't tell you it's off quotes or whatnot or things like that.
Definitely.
No, 100%. No, that's beautiful. That's beautiful. So let's, trading. We're still talking about your year of trading, your past year of trading, how that's been. Any highlights this year?
I think it was about March.
Yeah.
Where I met up with another guy, and he was going to try and automate the actual indicators. Okay. Now the automation, I have found one bot that has been reasonable. Okay, all of these other bots and stuff have still got to prove what they do. I stuck my neck out, and the results I saw from this bot and the testing of the bot was phenomenal. Okay, and I said to the guy, look, I'm going to test your bot, and within 6 hours, okay, I'll tell you if it's working or not. Okay, so by the time I tested it, okay, then no money back guarantee and all the rest of it. So I thought, oh well, okay, you shouldn't have done it, but I tried. It really looked good because of the short positions it was taking.
Yeah,
it would go in and out 10, 15 pips, quick. Yeah, and so I put in $100 in a live account. That took about 6 hours to finish up. Then I put it on 2 demos of 50% with 2 different brokers to mine. Okay. To see if it was the brokers. And that took 24 hours.
Okay.
To finish up that 50 grand.
To wipe it out.
Gone.
Gee.
Yeah.
And so, that's just the demo. That's just not a demo.
That was just the demo.
Yeah.
Yeah. So really, in my opinion, there is no robot on the market. And if there is, it'll be with the big institutions. As I said previously, I saw Citibank's one work. But you can imagine they've got the best guys there, the best IT guys, AI guys, everything. And if they develop something like that, it's for in-house.
Yeah, that is true.
The retailers like us aren't going to get it.
Yeah.
No way.
You say there is no robot. You're stepping on a lot of people's toes right here. Because, I think how the selling point of robots is that people are saying that you got to take the emotion out of trading. Now, to introduce a robot, obviously you trade a trader trades a strategy, and there's emotions because we're humans, involved in all of that. And now you make silly decisions. Now the selling point of a robot is that, no, look, take your actual strategy, give it to the robot. Now you don't need to deal with the other stuff, the psychology, the emotions, all of that.
Yeah.
Now people are saying that. Now they're using that as a selling point. And now you're saying there is no robot. I challenge anybody.
Yeah. To phone me, to talk to me, whatever.
Yeah.
Remember, when you're looking at the indicator, and even my indicators, okay, there is no arrow that's going to come in, or even moving averages. Let's go back to the old technical way of trading.
Okay.
And you've got moving averages working through. People have normally got a 200 line, a 100 line, a 50, maybe a 21, and an 8 for a fast. Okay. So the 8 starts moving up. It's not through the 200 line yet. So now it starts moving up. But as soon as it's through there, then it's back again. Okay. So when are you going to tell the indicator to buy?
Okay.
You see? So you can maybe do something like, if you have a long entry above the 50, then go into a entry. But you need a trigger point. And there's no solid trigger point. Maybe with the new AI stuff, I'd like to mention Elon Musk. Okay, I don't know if you guys have seen all of this stuff that he's talking, and he's got this AI robot, and they're trading cryptos, and it's like spitting out money you cannot believe. Okay, and News 24 actually have it on. All these are scamsters using News 24. All right, but they all want, I think, 3.5 or 4.5 grand. That's your initial deposit, and then this thing is going to trade for you like crazy. Okay, and then I started digging. Okay, and found out that all of that they even with AI, they've redone Elon Musk. So they put his face on. Okay, and with AI, he's talking, and it looks like it's him. And it's not him.
Yeah.
It's not him.
Sure.
Yeah. So we've got that stuff as well.
Yeah.
You know, and a lot of people are going for that as an easy buck.
Yeah, no, that's
All right?
so true.
Yeah.
That is so true.
Yeah. So
Yeah,
you build it up,
Mm-hmm.
okay, and you can see, okay, I made $3,000 today and I made $10,000 tomorrow. And you think, wow, let me just get my capital out. Okay, then then you can leave it. Why? Then they don't give you your money back.
Yeah, that's true.
Yeah.
Sure.
Yeah.
That is actually quite scary though.
Yeah.
I mean, the robot industry on its own right now, I think in South Africa, it's a mess. It's a total mess. And I think that promise of, hey, let something trade for you, let this trade for you, that promise right
it's
there.
idyllic. It's lovely. But I've yet to see in our industry on the street, you know, that you find a robot, because I mean, that would be ideal for me too.
Okay.
You know, I want to do 2, 3, 20 pips a day. I'll just pop it up, say you trade from 7 to 9.
Yeah.
Boop, boop, boop. I've got my 320s and I've had a nice day.
Done.
Doesn't work that way.
Doesn't work that way.
Nah.
Yeah. Do you think there's any consistency with robot trading? As before, now we're referring to retail traders. I'm not gonna refer to the institutional guys. Let's kind of leave them out.
We don't have the money.
Yeah. No. Do you think there's any profitability with trade with using a robot?
Yes, if it's programmed correctly.
Okay.
I think what you need to see is the ABC in the market, okay, and that it can identify a trend, and that you can trade in the direction of the trend, and you'll never know how much profit you can take on a trade. That's always the difficult one.
Okay.
So if you're trading with a robot that you know, if you analyze, say, gold for argument's sake, you know gold pushes 20 pips easily. So entry point, 1-to-1 ratio, 20 down, 20 up. Okay. And you set go for 3 or 4 or 5 of those a day, and don't trade the whole day with the robot. Have an entry time, a cutoff time. Okay, because then you get into an afternoon session. There's announcements that come along, and it shakes that whole robot up.
Yeah.
Okay. It just messes up the call it the liquidity factor that is actually stabilizing the robot.
Sure.
With AI, I believe that's clever stuff.
This is a game changer.
Totally. Yes, there's definitely going to be people that's going to be able to do it with AI. You know, I've tried with this, the one that writes all the letters and stuff.
Okay.
Yeah. And every time I say, create me a EA or a robot that can trade gold.
Okay.
On MT4.
Yeah.
Okay. And it'll come up in quick, just kicks it out, and it's all moving averages.
Sure.
Okay. They will not come with any of the other stuff that's in the market. And you know, the old school stuff is, as I said early on, is the moving average stuff that we used to trade with.
Yeah, but I've got a question though. You said something right now. You said if a robot is programmed properly, but how can one even verify that kind of information?
Just with testing, and remember in the MT4 environment and also TradingView, a lot of guys are using that platform now. I still use MT4 because I'm used to it and I trust it. Yeah. TradingView is really good. They've got a good setup and got some really good free indicators. So I've looked at some of their stuff, but I think because I'm comfortable with where I am, I'm not looking for new stuff, other stuff. Yeah. So I think when we get down to the actual trading and doing a robot, it's all about the coding, the language. Yeah. Okay. And if they can put that in and you can put it on a demo platform and you can see the results and tweak it till you're ready, then take $100, put it in the market and let it work. Because if it's going to work with $100, it's going to work with $1,000. Okay, or $10 billion. Doesn't matter.
It doesn't matter. Yeah, because I think that right there, it's so important. It's so key because people really just, they buy robots and then they just put the money they have there because now they've been sold that promise of, no, you don't have to worry. It's very accurate. Yes, the robot might be accurate, but the market,
No.
the market doesn't care whether the robot is accurate or not.
Exactly. Yeah.
Sure.
Yeah. So that's a very delicate area at this stage, I'd say. You know, but yes, in the next year we're going to find somebody with a real AI boffin.
Yeah.
Because I mean, what they're taking out of AI, I mean, cars that drive where, you know, without you even holding the steering wheel or the pedals or anything.
Yeah.
So this is mathematics,
Yes.
electronics. So some clever man is going to do that, you know, and put that together.
Yeah, and you know, it's crazy. You know, I've had somebody make this analogy of traffic, trying to break down and explain how every moment in the market is unique, saying that, hey, look, if you were to drive from here to Midrand, you can't do it blindfolded. And even if you were to drive and and be like, okay, Monday today, 7 o'clock, I'm gonna leave here, gonna drive to Midrand, and then the next Monday you're gonna do the exact same thing, everything exactly the same. You're not gonna get there exactly the same, you know. And it's crazy now with AI. With self-driving cars, I mean, you can tell a car to go there from there, but it will self-correct along the way. And I think with that self-correction, I think coming to the markets, that's going to be such a game changer. That whole AI self-correction. I think if that can get introduced within trading robots, I think, I think I would be a believer.
Oh yeah, no, me too.
Yeah.
So I mean, you know, as I've been doing this for many years now, and you know, I'll definitely be a front runner for that. I mean, if it's there and it's working and we've tested it, you know, and that's an offer for anybody out there. If you guys have got a robot you want to test, let me know.
Yeah,
I'll run it, and I'll run it properly, not back testing, because back testing takes certain data, okay, and does it. The robot must run on certain data in the back. Okay, historical data with the data that's happening right now. It mustn't just be historical. Yeah. Okay, and you know, if it's reacting correctly there, then we put it on a demo. Okay, and then put it on a small account, $50, $100.
But I have a belief though that you can't make money if you're depositing less than a small amount of money. So anything below 50K. I have a belief that robots can't really function with that little money. Or I don't know, you can correct me if I'm wrong. That's just where I just believe if you're going to buy a robot, have a lot of money stored for the robot and give it time to work through it. Because now the thing is, if you're going to put $100 there, you're not going to see returns. And unfortunately, people want to see returns. Yeah. Now they're going to be like, no, give me the high risk one. Not unaware that, hey, look, the robot is going to do what the robot is supposed to do.
Yeah. Yeah.
Without accounting for your emotions. Yeah.
No, I agree with you there, but remember, you're going to program the robot with risk and reward.
Okay.
Okay, so even if it's a small amount of money, the percentage is going to be the same as if though you had 10K or 50K in.
Okay.
Okay, so your percentage exposure to the market, it's just to see that the thing's doing its job. Okay, once you can see this is doing its job, then you can go to 10K, 50K, and the risk reward just gets bigger. Yeah. Yeah, you'll trade 0.01 lots. There you're going to be trading with 10 lots. Okay, so it'll balance out, and also the growth percentage-wise will be pro rata. Okay, but yeah. I would love to see one of those.
Yeah, no, I get you 100%. Yeah. Okay. So we still on. Okay. So now we've spoken about robots. I want to talk about another one. Finding the right mentors. You know, and I know we constantly talk about this, but I think this is probably one of the most difficult steps in a trader's career, because, you know, we might have a lot of from previous generation of people who are like, no, I'm self-taught. But then the same guys who are self-taught always many of them say, be like, hey, my journey would have been better if I had a mentor. But I think it's the finding of the right mentor that a lot of people are actually struggling right now, and be like, I don't know who to trust. I don't know where to go. I don't know who, and like, how does one actually find the right mentor?
Yeah, that's a difficult one.
Yeah.
Because unfortunately in the training mentorship arena, you find a lot of fly-by-nights.
Yeah.
Guys come in, pay me 10 grand, pay me 100 grand, whatever, and I think that's where the difficult part is. Who do you really trust? And I actually don't know how to answer that question, because who do you trust?
Yeah.
I think for people to make a judgment call is to get references. Do not just go with a guy. Ask him, listen, can I talk to 2-3 of the guys?
But you see, right there, those references right there, I know guys tend to respond and be like, but look at the testimonials on my Instagram page, on my website or whatnot. But personally, those testimonials, I mean, anything can be fabricated.
Yeah. Oh, definitely. Definitely. And I've seen that many times.
Yeah.
And it's a very difficult question to answer. Where do you get them? How do you get them? And I think the only thing there is by word of mouth.
Yeah.
If I'm working with somebody and, they're talking with you or whoever, and say, listen, talk to Richard.
Yeah.
He knows what he's doing, And, mentorship to me is a partnership. When I'm training with guys, I normally say, it's for a month. But I've been working with some guys now for 8 months.
Yeah.
And I talk to them every single day, that they see what they're doing, if they've had a hassle, if they've had a bad day, misreading certain stuff or whatever. They make notes, and once a day on WhatsApp, or we do a visual, and look at their charts. If I find something that is working better for me, I immediately update everybody. Okay, so I think it's a question who's going to hold your hand.
Yeah,
that's the big thing.
Yeah,
it's a very dark place, and the guys are just there, to come and go.
Yeah, before we started the interview, you mentioned something that was so fascinating to me, where you said that you had interviews with people that were gonna buy your service or your time. You always say you don't sell services, you sell your time. Yeah, and you said that you literally sent some people away because it wasn't aligning with what you were selling.
Yes, what I do is I try to find out, firstly, by asking a certain direction of questions. And to me, discipline is the first thing. Okay. The first attribute for such a person. And then questions about making money, and 9 out of 10 times everybody wants a quick buck.
Yeah.
If I start with $1,000, how quickly can I get it to $100,000? So that's like the first question, And then I know this guy is
there. That's a red flag.
Red flag, yeah. Yeah, and it's not about turning people down.
Yeah,
it's about wasting their time and money and mine.
Okay.
I'll rather put in double the amount of time for you. At our agreed amount of money, than make more money from a guy that's going to waste my time. You follow? So it's just it is just the way I saw. In London, I had a guy. I was charging £3,000 for my course there. Eh?
Sure.
Yeah, that was, and I had a lot of takers, and I interviewed this guy. And I realized, but he's like a compulsive gambler, And then he said to me, but don't you want my money? I said, it's not about the money, because you can come and cry in 3 months' time and say this stuff's not working. Okay. And then I left him. I said, well, you've got the bank account. If you want to come on course, do it. And he came.
Okay.
And he did turn out into a compulsive gambler. He was spending £10,000 a week.
Sure.
Yeah. He was literally, doesn't matter what I taught him, what I showed him about the charts. We would hear on the newspaper or read the newspaper and hear in the news, the pound's going to start taking a hammering and this and that and the next thing. Okay. And then he buys the dollar against the pound. And then the pound strengthens, and boom, and overexposure. He had no risk-reward ratio, nothing. He would just chuck it like £1,000 a shot into the deal, So what's important to me is my partnership with the people that choose to work with me. I want to see them. I want to see them succeed, and I will continue with them. I had one lady that went through a bad patch, and she said to me that she wants to back out. She doesn't think trading's for her. Yeah. So I said, well, you're welcome back, whenever. And then about a month later, she came back and she said, listen, is it okay if we start over? I said, good. I said, but remember, you must listen to what I'm teaching you, because 80% is psychology and 20% is know-how. The know-how I can show you in 10 minutes, but it's your approach to the market. When do you press the button? When do you get out? You must manage that. Yeah. And it took her about 2 weeks, and all of a sudden she's consistent. Sure. Yeah. Every morning, check in with her. Yeah, I'm cool. And she sends me screenshots. So she's not just talking, which is quite good.
Yeah, which is great. You mentioned 80% is trading psychology. And I think trading psychology is such a big part of the industry. We could even go as far as saying it's 90%. Because really, everything, we have access to all the information if we're really being honest with ourselves.
True.
But the problem is now, what do you do with that information? Now, that's where the psychology comes in. That's where the psyche comes in, the mindset comes in. So this is getting into a bit of trading psychology. What are some trading psychology tips or I don't know what to call it, refer to it, that you can give people?
Now there again, it's from personality to personality. Some guys handle it better, but I think the biggest thing about trading psychology is to know what you want out of trading and to set your goal. So once you've set your goal, then you say, okay, cool, I'm planning to take $1,000 to $10,000 in 12 months. And then you break down. Okay, how am I going to get to that $10,000? If my risk reward ratio is 1-to-1, I'm exposing 5%, 8% of my capital. That gives me so many lots. Then I need to do 20 pips per day. And that's the deal. Yeah. Okay. But that brings us all back to greed. Because as soon as you start doing 20 pips and you see, but wait, hang on, look at this. This thing's actually kicking out 40, 50, 60 a day.
That is true.
And then off you go. And you start chasing that tail. Okay. And before you see, you start losing the objective of your goal. And as soon as you lose your objective, you start sliding. Okay. And then you've seen it over and over and over. Yeah. It's consistency. You must have your plan, you have your goal, and how you're going to reach your goal. Because you want to look yourself in the mirror in a year and say, there was my 1,000, I'm on 10. Done.
Sure.
Okay. And if you break those rules, okay, I've got a guy down in Welkom, a super guy, architect, who worked together perfectly, everything. And at one stage, it was spot on. Okay. And then that greed thing came. You see, but Richard, we can make so much money fast here. And I said to him, no, it doesn't work that way. Just stick to the plan.
Sure. Yeah, okay. Yeah. With trading psychology, you mentioned something, in the previous interview that we did, you mentioned, what was it again? There was it $100 to So I don't remember that figure quite well.
Oh yeah, to $10,000.
$10,000. Yeah, that journey. I know a lot of people are sitting there like, yeah, nobody ask the question. They're like, yeah, no, we want to hear about the journey. So can we get a bit of insight into that?
Yeah, it went well, I'd say, for the first 3 weeks.
Okay.
I'm talking about me now.
Yeah.
And then I found myself with that same discipline problem.
Sure.
Exactly that.
Yeah, that's wild. Somebody with so much industry experience saying that, hey, look, even me. Yeah.
Yeah, I think that's a difficult part about psychology, you know, because with all of these years and exposure I've had to the markets, all of it boils down to psychology. Because now I was looking, okay, if I can do 3 20s in a day, then I finish the cycle not in 6 weeks, okay, but in 3 weeks.
Oh, so you made adjustments to the plan.
To the plan, yeah. Okay. And then what happens is, because you now become anxious, you become in a hurry, you start pushing.
Yeah.
And that's a big thing about trading. You mustn't push.
Okay.
You must sit and wait for the indicators. Yes, they're ready. This is a trade. Let's do it. Okay. And so then for the next 2 weeks, I actually went 2 weeks back on my first 3 weeks.
Sure.
Okay. And then I thought, why? What's happening here? And then I did this analysis. Okay. So when you plan to take a 20 pip out of the market, you can literally do that blindfolded.
Okay.
That is not a challenge. Okay. On literally every currency. Okay. The difference is, if it's going to be Forex, you must work with longer term charts. Okay. If you're working with gold, you must have short, medium. And you've got one shot in the morning, you get 20 or 30, thank you, done for the day. Tomorrow morning you start up, you do it again.
Yeah.
And then I took a break for a week. I didn't trade anything. And I just did meditative stuff, you know, self-control, visualization. What do I want? And that's the stuff that, as a mentor, I'm teaching my people now. Okay. And then I went and sat down. I reworked my stuff out. I think I was down to about 270 on my $100. Okay. And I just sat there and I built that.
So before you went back down to 270, what was your peak?
Peak was about 800.
800 from $100, 800 in like 3
about
weeks.
3 weeks, yeah.
3 weeks, that's impressive.
Yeah. So it really works well. But remember, your risk reward ratios are rather high. Okay. So that's why you go with the market, take what you can and run.
Yeah.
Okay. And then I just sat there every morning about 8 o'clock to 9 o'clock. There's a break. Every single morning you can check it out. And I put it in and let it run. If I get to my 20, sometimes it goes through 20 very fast. So I always go out manually. The right thing to do is just to put a take profit in. Okay. And then the next 6 weeks I finished that up. Okay. And then the greed part got to me again.
Sure.
Okay. And I thought, you know what? This cycle is working. You know, now why do you want to start with $1,000? Okay. And now if it's $1,000, it's going to be 10 times more. So $1,000 becomes $100,000.
Yeah.
Okay. But then you fall into that area where when you do a bad trade, it's going to take such a big chunk out of you.
Yeah, that's true.
So I thought, okay, if I can do this every 6 weeks, then I just recycle this every 6 weeks. Okay. And I'm meeting with the brokers next week. Okay. And look, copy trading has become a financial story, you know, with the regulators and all the rest of it.
True.
But they will allow you to copy trade for yourself. So what I'm going to do is I'm going to take my trading account and I'm going to open up 10 below. Okay. And I fill them each with 100. Okay. So when my top one now hits 10,000, I've got times 10.
Yeah.
Okay. And later on, just for the record, I found software. So if anybody is looking for this specific software, I can't remember the name off by heart, but it will handle the copy trading.
Yeah.
So
trade. I know what it's called. Yes.
Yeah. I'll have a look just now there. And trading something.
Trade copy or something. No, it's not trade copy, but I do know what you're talking about. Yeah.
Okay. Quite a difficult platform to instigate. And after I got that through, because they say it's a 1-to-1 ratio, but to get the same, you must actually multiply by 10.
Okay.
So I had to go through all of that and work through it. Yes. So that's my goal for the next year. Next year.
Okay, so basically, what my understanding of what you're saying right now is that you've been able right now to take $100 to $1,000 within 6 weeks.
To 10.
To 10. So you've actually done that.
Yeah.
You did it.
Yeah.
You did it.
Yeah.
Yeah, I think that's what I was trying to get to.
Yeah, no, I did it.
You did it. Yeah.
Yeah, I did. And it even after all these years.
Okay.
Discipline.
Yeah.
Discipline.
Yeah.
Yeah.
Can we get receipts?
Hey?
Can we get a receipt?
Yeah, what I'll do is I'll work out a thing for you and then I can send it to you guys.
I'll put it on the screen as well for the guys. Because I know a lot of people, they're like, okay, maybe they know this one. Yeah, because I think, so that's basically, so every 6 weeks, basically, in 6 weeks. Sure. Every 6 weeks. That is impressive. And it's just doing what you said you were going to do, 20 pips a day.
20 pips a day.
Yeah.
For 6 weeks.
But obviously, as the account grows, obviously, there's adjustments, because obviously the 20 pips that you were trading at $100 kind of just adjusts when you hit a 500 mark, when you hit the $1,000 mark.
Every day.
Yeah.
You'll be. I've got a spreadsheet I work off.
Yeah.
So every day you can adjust your amount of lots. Okay, so if you've made your 20 for the previous day, now you've got 120. So the amount of lots is now not 0.03, 0.04.
Okay.
So the next 20 is at 0.04.
Yeah.
Next 20 is maybe also 0.04, and then the next 20 will be 0.5.
Okay. So my question is, how do you now, especially embarking on such a journey, how do you now handle when things are not going in your favor? Or did you win every day? Of course you did not.
No, definitely not. Nobody trades 100%. Man.
Yeah, I think that's my question right now. Is that how do you deal with a drawdown period within your trading, especially when you have such a crazy target to do?
I think what is my saving grace is the way I'm trading.
Okay.
With these arrows and stuff.
Okay.
So I've got like a 95% success rate.
Sure.
1 day in a week will cost me.
Okay.
So if I trade and my first trade is a bummer, okay, I'll stop.
What, for the whole week?
No, just for today.
Oh, just for today. Yeah, but good. Again, you getting like 20 pips a day, or is it 20 pips a day?
No, that's what I wanted to get in the past.
Okay, yeah.
So when something like that happens, then I use the discipline and say, okay, fine, and I shut down for the day. Tomorrow, then I will see if I can find 2 20s to make up for today. Okay.
But one would argue that's like revenge trading in a sense.
Yeah, you see, the thing is, I'm not in a massive drawdown.
Okay.
I'm one trade away. Okay. And if I do not trade that trade, okay, what am I going to end up with at the end? Okay. If it's 10,000, if it's 9,000, doesn't really matter.
Yeah.
So if I have a day with a loss in, and I step away, and tomorrow I trade my 20 and I just carry on. Remember, there's going to be a day where I do a trade and that thing's just going to run like hell.
Okay.
And you do 40, 50 pips. Okay. So I call that catch-up trading, not revenge trading.
Okay. Yeah. I guess it's all psychology, how you view things. Eh?
Yeah. And I've learned a lot about myself this past year.
Yeah.
A hell of a lot.
Sure.
And the biggest thing for any of us traders is greed. Greed. It's just built into our nature.
Yeah.
It's like a lion hunts and eats meat. We want to make money.
Yeah.
And if you can find the balance there, then you're pretty okay.
Yeah.
Then you're pretty okay.
But this right now, it was not your average trading. It was not your normal trading. This was like a challenge that you set out for yourself.
Yeah. Look, on the one side, I trade a portion of the money over a year period.
Okay.
So there's a lot of more proper risk-reward ratios on money exposure and so on. Okay, this is pretty high exposure.
Yeah, that's true.
That is the safer option to do. And what I'm doing together with my broker now is actually analyzing longer term positions. Where you take positions on a 4-hour chart, and you actually sit in that position for up to 2 weeks, up to 3 weeks. So I think the thing that's difficult for me there is, particularly if I'm trading gold, is to see let's say you've gone 300 pips. And on the 300 pips, I just want to bank, and then there's a drawback on the 300 pips. And on gold, a drawback can be easy 180.
That's true.
And then the next moment, you're back on 400-500 pips, back on 300, But the end result ends up much easier on your mind. You can't buy into every day's trading then.
Okay.
You take a position and you hold it, and that's where these arrows are deadly.
Yeah.
They come in, and that market can go up and down, can go all over the show until the arrow doesn't show again. That's where it's going. And if it's a week or 2 weeks or 3 weeks, that's where it's going.
Yeah.
Well,
sure. Okay, so for those who don't know, Richard a year ago challenged himself that he's going to be taking $1,000 to $10,000. It was 6 weeks. You did say 6 weeks, right? Yeah, in 6 weeks. And he accomplished that. You guys will see on the screen as well, receipts as well. But I think also it was not just it was also trading based off your own the arrows over here. And I know we had a breakdown of the arrows last time, but just one more breakdown for the people who are joining us this time around. Yeah. So we can get to the screen now.
Okay. Let me just open up here. I think the dark one's going to be better. All right. Okay. So when we look at the market, I hope the screen is okay on the. But you guys have got
on screen. Yeah.
Okay. You'll see that we have here what I call a ball arrow. Okay, and here is a directional arrow. This blue one here.
Yeah.
Okay, and you can see from where in this one, when it comes in, it comes in. It's not that it doesn't repaint.
Okay.
Okay. So you can see it did all its thing up. It did all of the playing around right up to there. And now it's dropped down to the bottom again. Okay, and this was basically Friday's whole run down in the morning on gold. So
what time frame are we looking at?
We're on a 15.
15, okay.
Yeah, I prefer with gold. 15 gives me a better direction. It's more definite. So when it comes in, then all these other arrows in between. What I normally do is, let me just find my mouse now. Where have you gone? Okay. So all of these other arrows, your overall direction is that. Okay. Is the red. You can see there's a green, but here we also have the blue arrow.
Yeah, I can see.
So if you've got that behind you, okay, you trade short trades.
Okay.
So if you've taken a trade there, you can stay in that trade short until you see green.
Yeah.
Okay. And then over here, this blue came in as well. Okay. So after this, if you've come into the market over here, then you use these alternative arrows to get you into the direction of the two main arrows. So the two main arrows will give you the direction, anticipated direction of the market, and then you use the other alternate arrows to get in.
Yeah.
And then I've got a bar indicator. You'll see these little lines over here.
Okay.
Where are we? Come on. Okay, I'll just point them out by.
Yeah.
You'll see that white writing there.
Yeah.
There. Okay, they are like a doji.
Okay.
It'll pick up a doji.
Oh, nice.
Or it'll pick up a inverted hammer. Anything to indicate that the market's turning. And they are incredibly accurate.
Yeah.
Okay. So if you are not sure or you're hesitant about any of those, okay, you can then use that as an entry. It gives you a slightly later entry, but a deadly entry. deadly entry.
Yeah. So when you are targeting 20 pips, what's your stop loss?
20.
20. Also, it's 1 to 1.
Yeah, 1 to 1. Yeah.
I mean, one would argue that kind of removes the beauty of trading, because I think the beauty of trading is leverage as well, being able to go, 1 2 do 1 2 2 1 2 3.
Yeah. Now the leverage part, I normally do 1 to 100.
Okay. Yeah.
Most guys will trade 1 to 500.
Yeah.
And all that leverage means is you can put a lot more trades on. If you've got, say, $100, you can put 5 trades in. Okay, but if you've got 100 to 1, you can maybe put in 2 trades. Then your margin level, you're going to get a margin call. Okay, so it protects you in a certain way that you're not going to overexpose yourself to the market. Okay. Yeah. So because we've got a 1-to-1 ratio that we're working with, and the big thing is the exposure is higher.
Okay.
So you don't want to be able to have a 1 to 500. Okay, because then the percentages just bomb out completely.
Okay, no, I do hear you. So the risk reward ratio is 1 to 1. Yeah.
1 to 1. A lot of guys work on a 1 to 1.5.
Okay.
But they are more directional traders. They'll have a look at something like that with the entry here, and then they'll say, okay, fine, we're going to put the stop at the top, and we're going to go 1.5 down from there.
Yeah.
So the stop is, say, maybe 35, 40 pips. So then they target 60, 70 pips. Okay, and because of the way I trade, particularly in that system, it's a 1-to-1.
Okay.
Yeah.
Sure.
1-to-1.
Okay.
All right.
Yeah.
But the arrows have made it easier for my psychology, and much easier to be able to trade consistently in the market. Every day, take a portion of the market, walk away.
Yeah. Sure. Yeah. Okay. I wanted to ask a question. How does one, so your system, right? Okay, before we get to the next question, your system right here, it's not a robot, it's just the thing that, but the arrows, again, I'm going to ask again, the arrows, like what makes up those arrows? Like where does that information come from?
Okay, I worked with a lot of traders on forexfactory.com. This was some time back.
Yeah.
And also most of my arrows come off the internet. Okay, they're all available wherever.
Yeah.
But the difference is how to set them. Because remember, any indicator comes out with a standard setting.
Yeah, that's true.
Default setting.
That's true.
So to find something that is consistent, but that will work with the swings in the market, and then I tweak the indicators.
Yeah.
I tweak their settings and get them to react accordingly to the market. Because there's quite a couple of indicators that come in and they can hold you there for a whole year almost, and the direction's good and whatever.
Yeah.
You'd like to do the peaks and troughs because that's where the pips are.
Yeah.
That's where the pips are, particularly if you're a day trader.
Okay.
If you're a day trader, that's more. If you're going to become like a term trader, then 4 hours is actually better. 1 hour is still good enough for a day trader.
Yeah. All right, noted. So with I want to ask about profitability. How does one improve their profitability in their trading over time?
Yeah, over time, again, I think it's a matter of consistency. But what they can have a look at is, I trade mostly gold, okay, but there's nothing wrong with trading the pound or the euro. And if they are going to be trading a term trade, like on a 4 hour, they're going to be there for a week or two. Okay, then put this on to pound and euro and GBP Aussie and GBP JPY.
Yeah.
Those can be sometimes pretty volatile, but they're very directional. Okay, so if they are getting consistency with that trading, then put in a trade. For argument's sake, if you're going to be trading, say, 5% of your capital, then go and say, I'm going to trade 3%, but I'm going to trade 4 trades. And by leveraging the trades against each other, that's where the profitability can start growing properly. Okay, and it will all boil down to risk reward again. But don't go and run a 1 to 500 account so that you can put in more trades. Okay, because when it works, it's beautiful.
Yeah.
Okay,
and that's great. Do you consider this still manual trading? Because right now, one would say that you're dependent on what's coming through your screen. Do you feel like it's kind of taken away the element of trading for you?
The manual trade?
Yeah, no. Do you? Hence, I'm asking. Hence, my first question was: do you consider this manual trading?
Yes,
you do.
Yes.
Yeah, because someone would look at this and be like, "But Richard is just dependent on the arrows. So Richard doesn't trade, and there's no arrows. Richard doesn't analyze."
Yeah.
Someone would say that.
Yes, definitely. The thing to me is, I really don't care what's happening in the world. I don't listen to news. I don't read newspapers. I don't watch news, nothing. So what I do is I use Forex Factory and I check my announcements every day. So I know which are the major announcements and which of them can affect me and which part of the day I must be out of the market. And furthermore, I sit back and the charts will tell you what's happening in the market. And if you get an arrow that's giving you a direction, then you trade it. If you don't get an arrow, you don't trade it. So sometimes it becomes pretty boring because you can sit there for an hour and nothing happens, but then all of a sudden it's there and you get your target.
Yeah, but do you also feel like you're building a relationship with the particular instruments that you are trading? The reason why I'm asking that, because I know a lot of the times when we trade a particular instrument, you kind of build a relationship with it. You kind of get to know it a little bit more than you did the day before. But now when it's just arrows that are just popping through, obviously you can just sit there, relax, watch whatever. Or, do you feel like, you are building a relationship with the pairs that you're trading?
Yes.
Okay.
Yeah. I've got 4 that I look at mostly. And I stick with them.
Yeah.
Many times I go back to 1 or 2 others and have a look at them. But because I'm only working with 4 of them, you do build a relationship, and it's like you get a feeling for their movement. The way they move in the market. Yeah. And so I stick mostly with gold because it's the quickest, but I've looked at the GBP JPY and the Euro JPY and the GBP New Zealand, the Kiwi.
Yeah. Okay. So you don't miss, so this kind of takes away the elements of analyzing though.
Yeah, totally. Yeah. As I said earlier, that you know the old technical way of analyzing and going and putting in support and resistance levels from like a daily to the 4 hour to the 1 hour, and then when you bring that chart back into a 15 minute, and you've got all of these levels, okay, and they're supposed to hold. You know, and they don't, you know, because a lot of guys say from that price, the market's going to go up. Okay. If there's not an arrow at that price, I won't trade it. You follow? So, yes, I suppose it is an indication. And I mean, you can see these support and resistance lines that the system pulls in by itself. Okay. And it went down there, it pulled back into that one. Went through the 4 hour one there. They're at the bottom again. Yeah. Okay. And they come in automatically after 2-3 bars, and it sort of reads the volume. And when you get to arrow, then you know, okay, this is just about a certain. Yeah. It's coming off a certain level, but a level that is reading the current volume in the market. Okay. Not necessarily historical data.
Sure. Okay. I think I've asked you all the questions for today. Yeah, I mean, like I said, we didn't even get into the background thing today, so I think we just went straight into it. And thank you so much for coming out. I appreciate you taking time again to come back as well. Also for the viewers, I hope you guys enjoy it as well. I'm sitting now with Richard Stone. Yeah, Richard is not on social media, guys, but we will leave his contact information down below for you guys to reach out to him if you guys are curious about what is it that he does. Also access to this as well. They can talk to you. You're the man to talk to. And thank you so much, Mr.
Thank you.
Stone.
Thank you very much. Thanks for having me around a second time. I feel honored.
That's perfect. No, guys, thank you so much for watching. This was another episode of Market Masters, where I sit down with the most talented and prominent traders in the industry, and I'm sitting down with Mr. Richard Stone over here. Yes, and I'll see you guys on the next episode, same time, same place next week. Thank you guys so much for watching, and we out.
Good. Thank you.